the least expensive markets in the world. There is a generational opportunity right now to invest in extremely undervalued economies globally, and that's especially apparent as the US economy trades for record high valuations. Now, I've been an international investor for almost 20 years. I've done real estate throughout Latin America, venture capital in Asia, private placements all over Europe, and I'm even involved in a business in Africa. So I've really gone through a lot of different economies and different investing and business strategies, and I'm here to tell you that the US is by far the best economy environment to operate a business, to invest, and to put your capital to work. But, huge but, the US is extremely expensive right now. And that's not just on price terms, meaning the actual price you pay for something, that's on valuation terms. And that's something that most investors don't really look at when they are investing in something. Typically, people look at a stock price and say, oh, this number is high or this number is low. But what you should really be looking at is the actual valuation. So think about when you're in the supermarket and you're buying food or you're buying some meat and you buy, let's say, a big slab of steak. Do you look at the absolute price or do you look at the price per pound? Or you're buying a box of cereal or you're buying some sort of carton of something like eggs. On the price tag, it typically shows the price per unit. It's the price per kilogram, the price per ounce, or the price per egg. When you're shopping, you look for the best value. Now, some products have their price per unit pretty high, and for good reason. Maybe their product is better. Maybe they have the best eggs. The same thing can be applied to companies when you look at valuations. And the valuations that are being reached within the United States are, let's just say, nosebleed levels. We're talking about valuations that would suggest companies would have to exponentially grow for many years to come without any sort of interruption. Now, the US, like I said, is a great market, and there are a lot of reasons why you should be operating in the US. But right now, as we speak, late 2024, early 2025, the US just doesn't make sense for a lot of those big growth stories because a lot of that growth has already happened. It's absolutely possible that the US economy will still outperform the rest of the world, but the price that people are paying in valuation terms for companies is getting crazy. For example, the NASDAQ right now is trading at a PE of around 40. The S&P 500, an average PE of around 30. When you compare it to other countries and other markets, literally 10 times more than many other markets. And I'm going to share 7 countries with you right now that are trading for a fraction of what the US markets are trading for, and they present some pretty interesting opportunities because if you look at the future and expect massive growth, typically you look for opportunities that are undervalued. And right now, the US is not undervalued, it's overvalued by almost every metric that you can look at. Meanwhile, there's many countries around the world that are significantly undervalued, and that's just not compared to the US, but that's compared to their historical trends. So let's talk about 7 countries that look attractive to invest in right now. And I've picked a company from each country that is trading on the New York Stock Exchange. So I'm gonna list 7 different countries and talk a little bit about them. And then I'm gonna tell you a company that you can invest in from US markets, even though those companies are based in another country. This allows you to have lots of liquidity if you wanna sell it really quickly. And it's something I've learned over the years. I call this a barbed investment. You never wanna invest in a foreign market if you don't know how to get your money out. The money will go in very easily. And when you try to pull it out, you can't pull it out, just like a barbed hook. But before I dive into the 7 countries, what is the catalyst for this trend to change? Meaning, when will the US stop trading for such a high valuation? And when will other markets, other economies start to trade for a higher valuation, which would insinuate a larger return for an investment if you invested right now? And there's a variety of different catalysts which will make this occur. The first one is the US has a stock market bubble pop, meaning we have valuations drastically drop as investors exit the US markets because something happens to scare investors away. In this scenario, investors would immediately rotate into value, and the most valuable investments right now are typically in other countries because they are so cheap. A next scenario would be the US stagnates or slows down in growth. So maybe not a stock market pop, maybe not a bubble pop, but a slowdown in markets, which means investors will slowly rotate out of the US stock market and look for value. They'll look in places that are trading for multiples much less than the high-flying tech stocks that are all over the US stock market. Another scenario is that the US continues to grow, maybe at the same or a bit slower than it is now, but other countries start to catch up. There's a saying that when the US sneezes, the world catches a cold. But the opposite is true as well, meaning if the US economy continues to grow, the US consumer will continue to buy things. The US has to import products, the US has to pay for services, and other countries that do business with the US will benefit from that scenario. So even if the US stock market doesn't crash, it doesn't bottom out, there is a possibility that other countries can benefit from the continued growth and success of the US. And many of those countries right now are very undervalued. Now, if you think none of those scenarios are possible, then what do you think will happen? The US will just exponentially grow for the rest of time and the rest of the world will be completely forgotten? It's impossible to think that an economy like China, India, Brazil, all of Europe, all of Latin America, Australia, Africa will just disappear. But if you look at US markets right now compared to the rest of the world, that is what is being projected, meaning the valuations are so high for US markets, which would suggest huge future growth, while the rest of these markets are just so undervalued, which would suggest they are not gonna grow at all. I'm here to tell you that's not gonna happen. I don't know the exact timing, but I can tell you right now is a good time to think about rotating out of very expensive US equities and into foreign markets. All right, let's jump into those 7 countries. The first country is Greece. Greece is extremely inexpensive right now because most of their economy or most of their stock market is related to marine shipping, which is an industry that is very inexpensive right now. Also, Greece has had a tough time over the past, let's say, couple decades, really since the '08 financial crisis, when Greece got in trouble and had to be bailed out by the EU. This saddled the country with a ton of debt, which required Greece to implement a ton of austerity measures. Basically what they did is they said, hey, all the Greek citizens, we're gonna stop providing as much services and guarantees as we used to, which means you're gonna have a very tough time for the next couple of decades. And that is happening right now. However, Greece is actually doing a pretty good job. They're paying back their debts. They've actually been upgraded in their investment credit rating. And they are now really emerging from the disaster that has happened there the past couple of decades. This has put Greece in an interesting situation where you have companies that are actually growing now, but they're still really undervalued. So the biggest company that you can invest in right now in US stock markets that's based in Greece is Danaos Corporation. This is a marine shipping corporation and they are trading at a PE of 2.6. And this company has 50% insider ownership, meaning 50% of the people owning this company are somehow related directly to the operations or the actual ownership of the company. That means those investors have a pretty big incentive to make that company be successful. All right, next country, Colombia. I personally have a lot of connection to this country. I've done real estate there. I've traveled all over the place. It's a beautiful country, but it's pretty corrupt and there's a lot of problems with the government. However, that doesn't mean that there isn't opportunity to make money there, as I have with real estate, but their stocks right now are extremely inexpensive. Their president, who is Gustavo Petro, has been, let's just say, less than ideal for their economy. Colombia's GDP in 2024 was about 1.5%. However, next year it's projected to be almost 3%. So you have a growing, increasing GDP within the country, but the country itself is valued very, very inexpensively. And the perfect company to demonstrate this is Ecopetrol, which is their basically state-run oil and gas company. It's trading with a PE of 4 right now, but the yield, get this, their yield is at 40% right now. Now, it's highly unlikely this yield will last for very long, but the point is that investors don't want to touch this country. They want nothing to do with Colombia, which has made many of the stocks in Colombia trade for extremely low valuations, like Ecopetrol. All right, next country, South Korea. South Korea is going through a significantly rough period right now politically. Their president is being impeached. And on top of that, the country of South Korea has really bad demographics. They have the lowest birth rate in the world, which means their society, if they don't start having babies pretty soon, is gonna disappear over several generations. However, South Korea is pretty first world, meaning they have a very developed economy. They have extremely high-tech industry, and South Korea is known for their semiconductor production. The company with the highest market cap, which is trading for an extremely cheap valuation right now, is KB Financial Group. It has a PE of 6.8. The next country is Brazil. Brazil is probably my personal favorite right now because sentiment around Brazil is so low. If you go read any financial article or read the comments around anything that has to do with investing with Brazil, you'll just see pure negativity. However, Brazil is a big country. Both physically it's big, but also it has over 200 million people. This will be a major economy. Also, their age is generally a little bit younger than a lot of countries around the world, meaning they have some tailwinds in their demographics. The bad part about Brazil is that their president right now, Lula, is pretty anti-business, and there's a lot of problems with new capital coming into the country. Investors are afraid to invest in Brazil because they don't trust Lula. They don't trust that he'll run the economy in a business-friendly way, which means investors are not coming into Brazil, which means valuations are being driven down because there's not new capital injecting into the country. A perfect example of that is the company Petrobras, which is their oil and gas state-run company. In fact, 50% of Petrobras is actually owned by the Brazilian government. So they're very incentivized for the company to operate well, which is why they have a yield of 20% right now. Their price of earnings is at 5. So it's very cheap from a valuation standpoint, and they have an extremely high yield. Yield isn't always a good thing. Yield sometimes means that the company can't effectively reinvest back into their company. So you don't always want to look for yield, but when you see a PE of 5 and a yield of 20% in Brazil, you got to start scratching your head and say, when is this going to turn around? Now, it probably will turn around on the next election. Internal polls right now show that Lula is not leading for the next presidential election. So if a pro-business president does come into power in Brazil, the economy of Brazil could completely turn around and valuations could rise significantly from here. Now, if you want to catch the bottom, right now might be a good time to invest. However, be very patient. This is going to take some time to turn around, so keep your eye on Brazil. All right, the next country is Spain. Now, most of Europe is being completely ignored by investors, and Spain has pretty much been ignored with that group. However, the economy is doing pretty well there. The GDP in 2024 was at 3%. The next couple of years it's projected to slow down, but the country's done really well with tourism. They've cleaned up a lot of their finances, and most investors are ignoring Spain altogether just because it has had a pretty bad reputation over the past couple of decades. The most interesting company there is Banco Santander. I'm not necessarily a fan of this company, but it is the largest company there. It's trading for a PE of 5.7. The next country is Chile. Chile, as most people know, is extremely resource rich, a ton of copper, a ton of lithium, so a lot of value in the ground there. However, the GDP in Chile was horrible in 2023, actually declined by 0.5%. This year in 2024, they're up around 2.3%, so they rebounded a little bit. However, their president, who's left-leaning, Gabriel Boric, has not done too much for the economy. In fact, there's a lot of finger pointing at him right now for why Chile is not doing too well. He's been trying to nationalize a lot of the mining operations in the country. So think copper and lithium miners. He's been trying to take them over, have the government take them over to run them. Now, investors who believe that the private sector operates companies better than the government sector have repelled themselves from Chile because of this reason, which has driven valuations down significantly. The biggest company in Chile by market cap that's interesting is Banco de Chile, which is trading at a PE of 8 right now. Again, I'm not really excited about that company, but that is their biggest company that is trading for a very, very low valuation. The next country is Chile's neighbor, Peru. Now, side note, I've spent a lot of time in Peru and Chile. Beautiful, beautiful countries, but don't be mistaken. There are a lot of problems in both those countries. So don't think that me mentioning these countries is a recommendation. This is just a demonstration of what the most inexpensive markets are worldwide right now. In Peru, their GDP also shrank more than 0.5% in 2023, and in 2024, they had a big rebound. It was a little over 3%. So the economy did come back in 2024. However, their president, Dina Boluarte, she is kind of a basket case. She has caused a lot of drama. There's a lot of turmoil within her government, and no one's really confident that she's going to be able to lead this government for the next several years successfully. However, Peru has had a lot of partnerships with the US and China because they are so resource rich. So Peru long-term will probably do pretty well, even though there's short-term drama with the leadership and really with turmoil within the economy and the political class of Peru. The company there that's most interesting is Credicorp, which is a PE of 10. Now, as I started at the beginning of this video, I am very pro-US. I've invested around the world. I've learned the hard way that the US really is the best economy to invest in. But when you see economies around the world trading for such a drastic discount, there's often huge opportunity there because people are ignoring it. And as a contrarian investor, someone who looks for value, this is one of those scenarios where you say, it might be a good time to look at these undervalued markets, make a small placement, get some money into these countries, let it grow, and then rotate back to the US once the US becomes less expensive. But again, the US for the long run is the safest bet. You can make an argument that a lot of these countries are cheap for a reason, because people trust investing in the US more than they do these foreign markets. A couple other reminders. It's very difficult to tap the bell at the top or catch the bottom. What that means is you are never able to sell a stock or sell an investment at the very top or buy the very bottom of an investment. That just doesn't happen. Yes, some investors will point to their record trades or this one time they got things perfect, but even the best investors in the world, they cannot do it. So when you see these really inexpensive markets that I just shared with you, it's okay to take your time investing in them. It's okay to DCA, dollar cost average, slowly deploy capital, even over a year, because these are major economies that will take time to turn around. And there's no way that you're gonna catch the bottom. There's no way you're gonna be able to invest at the very, very bottom and then see it rise exponentially from after you invested. That just doesn't happen. So don't set your expectations up for huge returns immediately when you start investing. Another thing I'll mention is that a lot of the countries I just mentioned and a lot of the companies I mentioned are related to energy and or the financial sector. And you'll notice globally, both of those industries have traded at very low valuations over the past couple of years. Energy, because cyclically energy has been pretty cheap over the past couple of years, and a lot of these economies are highly correlated to energy prices. So a country like Peru or Chile or Brazil that export a lot of resources, if resources are cheap, their economies are not going to be doing too well. So that's one of the reasons why a lot of the companies within those countries, like the oil and gas companies in Brazil or Colombia, are very cheap because oil is relatively cheap right now. Also, the financial sector has gone through a lot of turmoil. You'll see a lot of banks trading for really low valuations because the banks have problems. So even though I mentioned those companies in those countries that are trading for very low multiples, it doesn't mean they're a good investment. It just means they're very cheap right now. And perhaps they're cheap for a good reason. Maybe crypto is coming to disrupt all of the financial sector, which I actually believe a little bit. Another thing to consider is the actual political environment. I alluded to several countries that have poor leadership right now. It takes time for politics to change within a country. We're seeing that in the US. Even if Trump comes in and turns around all of the things that have been done during Biden's administration, it's still gonna take time. So if you look at the US, which is a pretty well-run country relative to other countries, it's still gonna take time in the US. So don't imagine these other countries to immediately do a 180 turn. Last thing I'll leave you with, investing is a very emotional process. It's very difficult to go against the grain. It's very difficult to be a contrarian. But if you look at valuations, look at trends, and look where things are headed, typically the best investments are made when you are early in the trend, when you are early to noticing a certain situation unfolding. All right, guys, that's it. Enjoy the rest of the day. Take a look at this stormy Florida beach, and I'll see you later. It's a double rainbow.